Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate jargon and tell you what it really means for the people at the top and for us everyday folks. Today we're digging into Lease Corporation's latest report, and let's just say things are complicated. You might want to buckle up for this one. Before we dive in, if you like getting direct insights from these official filings without the fluff, make sure you are subscribed. And for more real-time discussions and to connect with other finance enthusiasts, join our Discord community linked in the description below. Now, Lease Corporation is reporting something called a Form 8. Think of this as a company's way of quickly telling the public about a really big important event that just happened, something that is not usually part of their regular quarterly or annual reports. It's like a company's urgent bulletin. The key date here is the 7th of November 2025. This is when the earliest event we're talking about today took place. Our subject is Lease Corporation, a company that deals in leasing airplanes. Pretty straightforward, right? They own planes and lease them out to airlines. It's a bit like a rental car company, but for much bigger vehicles. You'll see this number scattered around. It is their commission file number. It is basically their unique identification number with the Securities and Exchange Commission. This one is the IRS Employer Identification Number, a tax ID for government purposes. Not the most exciting intel for us, but important for their operational filings. Now, let's get to the juicy stuff. Lease Corporation has different types of stock, and one of them is Class A common stock. This is what many ordinary investors buy and own part of the company with. They also have Series A medium-term notes. This is essentially a way for the company to borrow money for a set period. Think of it like them issuing an IU to investors, promising to pay them back with interest over time. They've got different series of these notes, and this report specifically flags Series A. This is essentially the cover page of the report, and it tells us who it is for the US Securities and Exchange Commission, or SEC for short. They're the government body that makes sure companies are honest and transparent with investors. This part just tells us which specific rules they're following by filing this report. It means they're obligated to share this information because they've made certain public filings or offerings under these laws. This is their principal executive office address. It tells us where the main hub of their operations is located. And this is their main phone number. Again, standard stuff for an official filing. This section is where the real action is labeled Other Events. This is where they announce significant developments that don't fit into other specific categories like financial results or leadership changes. So, here is the big news. Back on the 1st of September 2025, Lease Corporation announced they were entering into an agreement to be acquired. It is a merger, basically meaning they're joining forces or becoming part of another company. The deal involves a company called Sumisho Lease Corporation, which is based in Ireland, and a subsidiary of theirs called Takeoff Merger Sub Inc. The end goal is for Lease Corporation to become a part of this larger Sumisho Lease entity. This isn't just a small deal, it's a significant change in ownership and structure for Lease. Okay, this is the event of the 7th of November. A crucial step in this merger process called the HSR waiting period has officially ended. HSR stands for Hart-Scott-Rodino. And it is an antitrust law in the US that requires companies involved in large mergers to notify the government and wait for a set period to see if the government has any concerns about the deal potentially reducing competition. The fact that this waiting period expired without the government stepping in is a big green light for the merger to move forward. It means antitrust regulators are okay with this deal. Even though the antitrust hurdle is cleared, the deal isn't completely done yet. The shareholders, the people who own the company, still need to approve this merger. They need a majority vote from those holding Class A common stock. Plus, there are always other standard conditions like making sure all the paperwork is in order and that no major unexpected problems pop up between now and the final closing. So, while things are looking positive, there are still a couple of key steps before the deal is officially sealed. Now, like most large corporate announcements, this report includes a section on forward-looking statements. This is basically the company saying, hey, we're talking about future plans and expectations, but things could change. These are our best guesses based on what we know now, but they aren't solid promises. It is a legal disclaimer to protect them if things don't go exactly as planned. They're telling us here that any words related to future actions, possibilities, or predictions should be treated as these forward-looking statements. So if they mention we anticipate, we expect, or we plan to do something in the future. Remember this disclaimer. This is a crucial point. Anything that isn't a confirmed past event is essentially a forward-looking statement. This includes their confidence in completing the merger, the satisfaction of all the conditions, and any assumptions they're making about how things will unfold. This is the bold print part of the disclaimer. They're saying right here that if any of the risks they mention actually happen, or if their assumptions are wrong, the actual results could be very different from what they're telling us now. They're not guaranteeing that their future plans will actually happen. Here they start listing potential roadblocks. They state that their merger could be blocked or delayed by governments not giving approvals, or if the shareholders don't vote yes. This is a pretty standard risk, but it is worth noting that even with the HSR period over, other regulatory approvals could still be an issue. And of course, shareholder approval is far from guaranteed. This is a common consequence of big mergers or acquisitions. When employees don't know what the future holds, they might start looking for jobs elsewhere, which can hurt the company's operations. Also, just the uncertainty itself can make the business run less smoothly. This is an interesting operational constraint. During the merger process, the company might be restricted from taking on new debt. This could limit their ability to manage their cash flow and potentially affect their credit rating, which is important for borrowing money in the future. A classic catch-all. Mergers are complicated, and often unforeseen expenses or issues crop up, leading to delays or unexpected costs. This points out that the deal could be called off. And if it is, there might be financial penalties called termination fees that one party has to pay to the other. This tells us that the full picture of risks is much broader and can be found in their other periodic filings. They're essentially directing us to their other reports, like their 10K and 10Q, for a more complete understanding of all the potential downsides. This is the final nail in the coffin for certainty. They're explicitly stating that there is no guarantee the merger will happen, or if it does, when it will be finalized, or if the promised upsides will actually materialize. It's a very cautious outlook. This page number just confirms we are moving through the document. They're reinforcing the idea that their crystal ball isn't perfect. New risks can pop up that they can't even foresee right now. And importantly, they are not promising to update these statements if bad things happen or if things change unexpectedly. They want to make it clear that these forward-looking statements are a snapshot in time. This section is about providing more context and directing investors to other relevant documents. They're reminding everyone that on the 4th of November, they filed a document called a proxy statement. This is the document they send to shareholders before a shareholder meeting, explaining the matters to be voted on, in this case, the merger. It is a critical document for understanding the details of the proposal. This is a strong recommendation. They're basically saying, if you are an investor, you really need to read this proxy statement because it is full of vital information about the deal. They're pointing investors to the SEC's website as the place to get these documents for free. This is standard practice to ensure transparency and access to information. This part clarifies who might be influencing the shareholders' votes on the merger. This means that the company's leaders, along with certain employees and others, could be seen as trying to convince shareholders how to vote. This is important because it means their communications about the merger might be biased, and investors should be aware of that. They're referencing another filing, their annual meeting proxy statement from March of this year, where you can find information about the people running the company. This reiterates that the proxy statement, the one about the merger vote, will contain details about the personal stakes these participants have in the outcome of the merger. This is crucial for understanding potential conflicts of interest. Another page number. Just moving along. This is the official sign-off section of the report. This is just the formal statement confirming that the company is officially filing this report as required by law, and the person signing it is authorized to do so. The name of the company doing the filing. The date the report was actually signed and submitted. Notice this is a few days after the key event on the 7th of November. This is the name of the person signing the report, and this tells us her very important role within the company. She is high up there, responsible for legal, corporate governance, and compliance. Final page number. So what is the big picture here for Lease Corporation? Well, the main story is an acquisition. The HSR antitrust waiting period expiring is a significant positive development, meaning regulators are likely fine with the deal. However, the report is packed with disclaimers emphasizing that the merger is far from guaranteed. Shareholder approval is still needed, and other closing conditions could easily derail the process. What we're seeing is a company navigating a major transition. The risks they've outlined, from potential regulatory roadblocks and shareholder dissent to the impact of uncertainty on their business and employees, are very real. The fact that they are so heavily emphasizing the forward-looking nature of their statements and the possibility of the deal falling apart tells us they are managing expectations very carefully. From a strategic standpoint, this acquisition by Sumisho Air Lease could signal a shift towards consolidation in the aviation leasing market, or perhaps Sumisho sees strategic value in Air Lease that makes it worth the acquisition. However, until the deal is truly finalized, Air Lease remains in a state of limbo. which can be tough on operations and morale. We'll be watching closely to see if that shareholder vote and those other conditions are met. The devil, as always, will be in the details of those upcoming proxy statements and any further announcements. Alright, that is our breakdown of Air Lease Corporation's latest filing. What is your take on this potential merger? Do you think it will go through, and what impact do you see it having? Drop your thoughts in the comments below. If you found this deep dive helpful, please hit that like button. It tells us you want more content like this, and subscribe to Corporate Decoder for more in-depth analyses. And don't forget to join our Discord community, linked in the description for lively discussions on all things finance. Thanks for watching, and we'll see you in the next one.